Fios is not cable. We're wired differently, which means you can get the fastest internet available with equal upload and download speeds from 50 to 500 megs. So you can upload 200 photos before your favorite song is finished. Click the ad and switch to Fios today to get our best offer ever.
This is a download from BFM 89.9, the business station.
Good morning, Dodge. So the U.S. GDP in the second quarter grew a pretty nice 3.9%. This compares to about 0.6% in the first quarter. Do you think this is sustainable, and what is driving the growth here?
When you look at it in isolation, Julian, good morning. When you look at it in isolation, yes, there are a lot of things to like about the domestic side of our economy, particularly in the second half, despite the year, despite the global malaise that's going on in general. It was better than expected growth was fueled by improved consumer spending. That's always a plus. It was revised up to 3.6% from 3.1% in August. Cheap petrol prices obviously helped that. Also, we had relatively higher housing prices, so that helped, and that boosted the perception of household wealth. We had revised construction spending data. That helped push up growth too. Non-residential fixed investment expanded 4.1%, which is good. There was a smaller accumulation of inventories than earlier estimated. That's also positive. Our after-tax corporate profits were also stronger in the second quarter than previously thought. All this is positive. There is nothing in that final snapshot of the U.S. GDP that will change the direction of the dollar, which is firmer, or the U.S. government bond yields, which are higher. But overall, just when you look at it in isolation from an economic point of view, we did just fine and better than expected.
Some say that cheap oil was also a big help. Could this be the pleasantly surprising thing that will boost U.S. and world growth going forward?
Well, yes and no. Yes, obviously it did help us. It's very clear that it helped. But overall, when you look at the price of and what it does to those who are participating in that industry, that's very different. So we're watching to see if it's going to expand beyond just the end user. We're looking at like Saudi Arabia. They have slumped. They have reduced their foreign reserves by nearly $73 billion since the oil prices started to decline. The kingdom keeps spending to sustain the economy and fund its military campaign in Yemen. So that's something to watch. Also, the smaller oil-related companies are going to face increasing challenges. You looked at the UK smaller energy companies such as, there was one that just came out. You'll see that OVO Energy, you'll see that they suffered a far deeper loss, even though they tripled their customer numbers. We're going to be watching that. And some of the bigger companies like Chevron and Exxon, Julian, they're going to have to prove how they're going to handle the oil price slump. It's not, you can't just shut down oil refineries because it costs more to shut down than keep them running, and they have to come up with management challenges for the future to meet them. So it's not clear overall whether it's going to be a plus or minus, but obviously it's going to change, it's going to shift the positive to different parts of the economy.
Now, the U.S. markets did quite poorly last week, and of course, these GDP results are probably lagging indicators. What do you think is in store for the markets going forward this week, in the coming week?
In short term, the short term is clearly turned bearish. It started late trading on Thursday, 2 weeks ago on the 17th. From a scalping point of view, we did start a 1.5-day rally on Thursday into Friday, but the advance already appears to be petering out. So we don't expect short-term rallies to be all that exciting unless, of course, you're a trader and trying to take advantage of these swings. But I'll tell you, the volatility has increased and the timing of the volatility has changed and the duration of the volatility has changed. Even the technology heroes that we have had over here are getting to be questionable and are beginning to look like they'll become a problem. We're watching Amazon, Facebook, and Priceline, and to see whether they hold key levels of support from a technical point of view. If not, even the heroes are going to be hit. So if you can get above certain levels from a trading point of view, yes, then we'll have a better quality rally, but we're also talking about a B-minus quality as opposed to an A-minus. So right now, the questions that are being asked of the market are negative, and also there is a big difference between the fundamentals of the company and the stock of the company. And right now, that difference is increasing.
Now, you're certainly right about the Dow becoming more volatile, but the Shanghai Composite seemed to have stabilized over the past month. Do you think that the worst is over for Shanghai and we're in for more ominous times in the U.S.?
Well, you take a look at it, and it's beginning to find support. It's at 3,092. It can find support at 3,000, and quite frankly...
This is the Shanghai you're talking about, right?
Yes.
Okay.
And when you take a look, that was the level it was at back in December of 2014. So I think the worst of the downturn could very well be over. From a fundamental point of view, there's still some pressure, and if we can get some support, whether it is from investor support or governmental support or whatever, if we can hold, then yes, I do think the worst is over, and that may help the world in general. But again, the question still, it has to hold support, and we're still seeing quite a bit of volatility on day-by-day basis. So the volatility will probably continue for a while. As long as it holds some key levels of support, we should be fine.
Thank you. That was Dorland, Chief Investment Officer for Landor and Fuest Capital Managers in New York.
Thank you for listening to this podcast. To find more great interviews, go to bfm.my or find us on iTunes. BFM 89.9, the business station.
This year, I will chew 117 number 2 pencils.
I will doodle 9 Staples notebooks to death.
When it comes to school supplies, it's guaranteed your kids will go through a lot.
I'll make a whole lot of paper airplanes.
I will lose my backpack.
That's why you get guaranteed savings for back to school at Staples.
I'll give away my last pen to Nathan in math class.
Get guaranteed savings at Staples, and right now, 1 subject notebooks for just a penny with a $5 purchase. Staples, that was easy. Valid on select SKUs while supplies last. Limit 6. Ends